What's happening, everybody? Happy Thursday. Today is February 22nd, 2024. Hope you guys have had a great short week, right? We had Monday off. And boy, the market I was teasing JC this morning. It's pulled the rug on the Bears this morning, right? JC's been calling for a rug pull in the markets, and he might still get it very soon. But the market has other ideas. The Nvidia earnings report yesterday just lit a fire under stocks. We gapped significantly higher today, and we continue to hang near the highs of the day. We'll get into that in a second. Before we discuss any charts here, let me drop the old disclaimer that everything we discuss here is for educational purposes only. I'm showing you what I'm doing with my money, and I hope that you learn something along the way. So in this jam session, for those of you who are first timers here, seeing us on Stock Market TV, this is where we review positions that we have on in All-Star options, any exits that we may have had over the last week, any positions that maybe we've made some adjustments to as market conditions have changed. And then we update stops on existing positions. We've got a lot of bullish positions on that we're going to be updating our stops, raising our stops on to try to lock in some profit or at least minimize the potential for any losses. So we do that. And then, of course, we just quickly review any new trades that we've put on since we last spoke. That's what we do here in the Options Jam session. We do this every Thursday at noon Eastern. All right, let's talk about the broader market. We just kind of touched upon it already. Here's the S&P 500. This little blue dot right here is today's gap. We've gapped higher. Is this a gap and go? Who knows? We'll see. But during the last week, it was looking like maybe the markets were getting a little out over their skis, as they say here in Colorado, and maybe we were time for a pullback. But today's market action is making many of us rethink that stance. Look, only price pays, as my friend Brian Shannon says, and right now price is telling us that the stocks want higher. So we'll see. Volatility index a little bit raised, given where we are, the way the market's been rallying today. But if we don't see any significant give back in the market today or tomorrow, I expect VIX to kind of retrace back down to a 14 handle, maybe around 13. We'll see. But certainly no alarm bells going off in VIX right now. Okay, we've had one exit this week, and this was a profitable exit, not the profit we were hoping for, but a profit nonetheless. This was a call calendar spread that we got into in the healthcare ETF, ticker XLV. We got in on February 5th, and ideally what would have happened would be that the calls, the short March calls would just kind of, we would get an opportunity to roll those a couple times for some credits to lower our cost of participation in this trade and perhaps enhance our profit down the road. But the other exit we had is if and when XLV traded up to 145, which is what our strike was, then we were just going to take the profit, whatever that profit was, and book the trade, because with a calendar spread, once you get past the strikes, then you are actually on the backside of the P&L slope, and your potential profits actually diminish as you get further away from that strike. So we paid $485 to get into this trade on February 5th. We exited this week for $535, so 50 cents. Not the profit we were hoping for, but best practices dictate that we have to take the trade off, and we did. At least we did it for a profit. Great. We'll move on. All right. I've got two other trades here that we need to pay attention to. We're still in them for now. But these next two trades, they both closed below our stop loss levels yesterday at the close. But given the gap up that we saw in the market today, in the case of IBM, it gapped right back above our level. We're looking at the 180 level. So yesterday we closed below 180, which is the signal that, hey, it's time to take action. But with today's gap, it gapped back up into the 182 range. We're sticking with it. So we're going to reinitiate our alert there at 180, and we'll wait for another close. Some of you may remember Wells Fargo Wells Fargo is a trade that we're currently in, and we had a couple days a few weeks ago where it stopped or it closed below our level, then gapped above it the next day, or traded below our level intraday and then closed back above. Either way, it flirted with our stops, but it didn't quite trigger us out, and now we're getting rewarded for our patience in Wells Fargo. Will IBM do the same thing? I don't know. But right now we're sticking with IBM for now, but definitely keep an eye on it. We're long June 170 calls. We paid 294 back in late November. A flip side, this is actually a short trade. Pinnacle West Capital, ticker PNW. We wanted to close, we wanted to get out above 70. We had a close above 70 yesterday. This morning, one of the few stocks that was down on the day, which is why we like it as a bearish hedge, by the way. But it was down today, back below 70. So we're sticking with it for now, but it's getting close. As we're talking right now, it's trading right near 70. So if this trades back up above 70 today and kind of hangs there above 70 intraday, I will close it. Otherwise, if it does not, I'll just set that alert at 70 and wait for another close above it again. But this bearish put spread here in Pinnacle West Corp is so far not working, and we may be getting out today. So stay tuned on that. Which, by the way, for those of you in the All-Star Options Telegram chat room that we have for members, if I do exit that trade today, I will alert you in real time when I do it. Okay, let's get into the updated stops. Boy, it's a bull market according to many of the positions we are in. And I've said this the last couple of weeks. These are some positions, some long positions that have worked really well for us, but we are aggressively trailing our stops because, hey, we can't deny that this bull market, this run is getting a little long in the tooth. Did we just start a new leg today? Maybe. Let's hope. I'm fingers crossed. I would love it if we're starting another leg higher with all these long positions that we have on. But that said, we still are seeing some things under the hood that are giving us concern that a pause may be likely. So we are just being careful. We're still sticking with our positions, but we're being aggressive with our trailing stops. In this case with Uber, a trade we've been in since early November. This trade has been a huge winner for us. We're long the March 60 calls that we paid $1.55 for back on November 8th. We are now raising our stop to 74, just below that recent gap. That was the earnings gap from last week. If we see a close below 74, that's our signal to get out of Uber. Which, hey, these are March 60 calls, so we're starting to run out of time anyway. So if we trip up here at 74 and get out there, that's okay. It's been a fantastic winner for us. Although I should mention 91 up here. If Uber does turn around and gets up to 91, we will be taking some profits up there, but we'll alert you when we get there. All right, RSG, Republic Services. We're long some April 165 calls we got into back in November 13th. We are now raising our stop to 175. All right, this would be a nice win. It's a nice win now. It'll still be a nice win if we have to exit around 175, but that's our current stop. Congrats to those of you who got into this, what many might have thought was a boring trade idea at the time we put it on, but nothing boring about this trend. So let's roll with it. Okay, Ecolabs, ticker ECL. We had a fantastic gap in our favor following earnings a couple weeks ago or early last week. We're long the July 220 calls that we paid $5 for back right before Christmas. It was our last trade before Christmas, I believe. We are now raising our stop to 212. We don't want to get back into this gap here. If we get into the gap, at least short term, we don't like it. So we're going to aggressively raise our stop to 212. Any close below 212 gets us out of Ecolab. All right, Taiwan Semi. Boy, this one is an interesting case. During this rally right here, it literally kissed our exit price. This right up here, literally the high was 135, which is the short calls in our bull call spread. We're long a May 115, May 135 bull call spread. The plan was, as we laid it out in the blog post when we put the trade on, is that if it gets to 135, that's when we would close the position and take our profits. Well, it kissed 135 for about half a second one day, about 3 weeks ago. You can see it in the chart. it didn't, like I said, kissed it for a second. Not a good opportunity for us to exit the trade. It's pulled back on us, which is unfortunate. But this chart is a little out of date. This is as of yesterday's close. Taiwan is ripping back up again today. It doesn't show on this chart. I apologize, but we're back. I think we're like 132, 133 right now. So we're heading back towards that 135. If we get to 135, and this time we actually hold there or trade above it, we will close the spread, book our profit, congratulate ourselves on a nice win. Meanwhile, 120 is our new stop. If we can't hold 120 in Taiwan semi, we will exit the trade there. Now, depending on when that happens, if it does happen, it may or may not be a profitable trade for us. It'll be close, but more or less it'll be a scratch. We'll just call it a scratch, which is better than a loss, right? All right. Next up, Snowflake. We are long a bull call spread, long the May 210 calls and short the May 240 calls. Got into this back during the Portfolio Accelerator event in New York City on the 26th of January. Our new stop is now 205. We want to see Snowflake hold above 205. Any close below that gets us out of the trade, probably for a small loss, but that's okay. And I think this is our last, no, we got two more. Here's a short trade. Here's a short trade that's working for us, Lululemon. We got into this on January 31st. We're long a bear put spread. So we're long the April 420 puts and short the April 380 puts. We paid $650 for it. The trade is working. That's good. We're lowering, in this case, because it's a bearish trade, we are lowering our stop now to 475. Any close above 475 gets us out of Lululemon. But this was one of those trades we put on as a bearish, if nothing else, a bearish portfolio hedge. We wanted to get some short positions on stocks that were not currently rallying. And as you can see, Lululemon over the last two plus months has been trending down, even as the broader markets have been making highs. So these are the types of stocks we love to put on portfolio hedges on, so to speak. So again, Lululemon, new stop is 475. All right, our last stop update is Merck. We got into Merck on the 12th, not too long ago. We are long September 140 calls that we paid $255 for. This low that was put in early last week, we want this low to hold. If we break this low, which is about 124, then we are no longer bullish on Merck, at least in the short term. So we will exit our trade, reevaluate. Maybe we'll reevaluate for a new entry, a better entry. But for now, if we break 124, we want out of Merck. Come on, Merck. You could do it. Follow through for us. All right, so that's it with all the updated stops. The last thing we'll cover real quick, because we have two new trades that we've put on since we last spoke. It was a short week. We had Monday off, so we only have two new trades this week. I'm not going to get into the trade-specific details here for these two trades. If you want to find the details, please head to allstarcharts.com. Go to the members section, find the options section. You will find detailed blog posts for each of these trades that tell you what do we like about the setup, why we're getting in, how we're trading it, what type of strategy we're using, where our stop loss levels are, how we will manage risk, where and if we will take profits along the way. All those details are in the blog post, but I'll tell you that we put a bullish trade on in C Limited. This is a Filipino stock, Filipino transportation stock, I believe. Straza will correct me on that if I'm wrong, but either way, we put a bullish trade on in C Limited. And we put a bullish trade on Nucorp Steel Company, ticker NUE. So those are the trades. If you did not get the details, please head to the blog post. If you don't have access to those trades, shoot us an email, info@allstarcharts.com, and we will get you hooked up with everything you need to be part of the community and get real-time alerts and have access to me and be able to ask questions and have access to our community. We have a community of options traders here at All Star Charts. We have a live chat room where people can chat throughout the day and have access to me and each other. So it's great resource for everybody. Again, info@allstarcharts.com. Hit us up if you want more information. All right, folks, I've been Sean McLaughlin. I'm Options Sean on Twitter. Hit me up there if you have any questions also. In the meantime, have a great weekend. We will talk again next week. Take care, everybody.